Passive Pockets is presented by Equity Trust. Anyone investing today knows how difficult it is to manage their portfolio and track all their investments, all while trying to avoid costly errors. Staying organized with your investments can feel impossible, but today's guest found a better way. Hello, passive investors. Welcome to Passive Pockets, the passive real estate investing show. I'm your host, Jim Pfeiffer. In this episode, we'll meet Litan Yahav, the CEO and founder of Vyzer, an innovative virtual wealth management assistant designed for passive syndication investors. Litan comes from a deep background in real estate and syndications, and he created Vyzer to tackle the messy, time-consuming process of organizing multiple deals, documents, and returns. We'll explore Litan's journey from real estate investor to tech entrepreneur, the story behind Vyzer's creation, and how this tool can help you stay organized, help you make informed decisions, and ultimately optimize your real estate portfolio. Also, in this episode, a very exciting announcement. Stick around to find out how you can get access to Vyzer for free. Let's dive in. Litan, I'm really glad that you're here with us today. First question, I just want to jump right in. You know, what is passive investing? We talk about it all the time, but what do you think passive investing actually is?
Yeah, I'm so excited to be here. One of the biggest questions that I always ask myself and people I talk with about is, what does it mean to passive invest, right? Over the years since I started investing, I've defined this spectrum. Because passive investing, if I invest in the S&P 500, that is probably the ultimate passive investing. I just put money in and don't do anything, right? And on the other side of that spectrum is going and flipping homes in my mind. If I go and I buy and flip homes, that's like the complete opposite of passive investing. And then there's everything in the middle. The way I see passive investing is, if I reduce my time or increase my time in any particular investment, the return on that time should be with the same ratio. For example, if I have to spend 2x more time doing a specific investment, I expect at least 2x the potential returns from that investment. And when you put in that, type of framework, it helps me at least define, is this worth it or not worth it for my time?
That's brilliant. I mean, that changes everything, right? Because you're looking at it from what are the returns, and it's return on time. And that's a metric that I don't think we spend enough time on. So I love that perspective. And especially when you're looking at flipping homes or, dumping money into the S&P index. And what we do, syndication investing, that is a form of passive investing. And the way I look at it is everything's done up front. And once you're done, then you send the wire, then you're kind of just reading reports after that. But, my returns that I've had on syndication investing meet or exceed the returns I had when I was a turnkey, right? What I called passive investing, which was not passive, it was active. But my time is much less in syndications and my returns are more, right? So I had it completely backwards at that time.
Again, we learned this the hard way, just like by trial and error. And we can go back to how we started even getting to passive investing, because that's like where this, I won't say epiphany because that's a little mumbo jumbo for this, but that's where it hit me where, all right, I really need to define, both me and my co-founder Tomer need to define, what's our strategy? How do we want to invest? How do we want to spend our time?
Let's get into that. I know that you started passive investing, right, when you had an exit. So can you talk about that just from the beginning? How did you get into real estate? How did you find syndications and why? Long
story short, we exited our last startup almost 10 years ago. I'm Israeli. I'm an Israeli tech founder. I lived in Israel all my life. I just moved to the US a few months ago. But as an Israeli, when you have this liquidation event, everyone goes and looks for interesting things to do with their money. Now, we made enough money where it made sense to start to deploy in different places, not enough where we had, a family office. And so me and Tomer, my co-founder, we knew we wanted to get into real estate. We had friends who were doing real estate, and, everyone knows a guy who does something. And so we found a guy we trust who was selling full turnkey single family rentals in the US. And we trusted him from a personal standpoint that he's not going to screw us over. Anyway, so we bought these 2 single family homes actually near you back in Ohio, outside of Cleveland. And at the same time, we also put some money into syndication. This was like 2015. All right. At that point, we expected these single family homes to generate nice cash flow and appreciation and all that. And we were a little skeptical about the syndications. But like a few months in, the bad stuff started to happen with these single family rentals, which, we had a property manager in place. We never even seen the properties. I mean, it was like literally passive as it could be. But, we get a call from the property manager. Hey, this guy needs eviction. The municipality reach out and you need to fix this on the sidewalk and this tree needs to be taken. And it's like a whole year of like constant communication, eviction notices and screening new tenants, just all that stuff. But at the same time, we had this passive, like a syndication we did. And we're like, holy crap, this is generating better returns. There's no time invested into it other than the administrative side of like gathering stuff, and which is nothing when it's one. And, simultaneously these 2 single family rentals. And it was like, we just decided from that point, we're not doing any of these, rental properties anymore. And we just started to pour more and more money and more deals with different GPs and sponsors in the syndication space. That's our entry into the real estate world.
Well, I mean, you figured it out faster than I did. I had to do a 22 unit, 10 single family homes and all this before I realized, oh man, syndications are, as you said, not only more passive, but they also make me more money. So I know you've been doing this since 2015. You're an experienced limited partner. You're on our deal review series panel from PassivePockets, so we thank you for that. So before we dig into the details of Vyzer, because that's what I want to make part of the focus of this episode, whenever I get an experienced LP, I want to know what's going to happen in 2025. So get out your crystal ball and let me know what you're seeing coming in the new year.
I feel like things are changing so fast. When we started 10 years ago, the syndication market, 0 interest rates, everything was amazing. Everyone who threw a ball somewhere would make a good real estate deal work because, of the interest rates. And then as time progressed and, COVID and then the interest rates went up, that started to affect the more traditional syndications. And you started to see less single deals and more funds because people were now, all right, they're not closing as many deals, but let's do a fund because we can monetize that as from a sponsor perspective. And also I can act quicker because I already have money that's ready to be deployed if I find an opportunity. And so you saw a transition from single deals to funds. And then you also saw a lot more transition from equity to debt. So as an LP investor, you saw, it made more sense to have lower risk, the same returns. Like you were getting 10, 12% returns on a debt LP deal versus a syndication in multifamily. So that led up to now. And then the future, the way I see it, I think obviously there's more deals to be done on the market. I do think syndications are going to be back, but only with really good operators that have a proven track record, not like before, because it's more difficult to operate these deals. I think it's still difficult to find good deals. And so again, it keeps you down to the narrower numbers. And so I think there's going to be a consolidation or more concentration in less operators as there were in the past, meaning it's going to be harder to find those good operators. I think from an asset class perspective, I'm not seeing multifamily come back as much as it was in the past. It's just a more solid, lower risk, lower return model, what I'm seeing at least. I think still private debt during 25 is still going to be okay. I don't think interest rates are going to come down substantially like a lot of people might. And so when they won't come down substantially, private debt is still going to be a good asset class. And I think the outliers of which are not multifamily are also going to be really interesting. Like industrial is going to be really interesting. It already is, and I think it will continue to be. I think mobile home parks and RV parks is also going to be something that more people they're already putting more money into them because people have understood that, it's not as risky as they thought in the past. And also all the tax advantages that are in those deals are pretty high. That's just like my assumption of what the next year is going to look like.
And are you still investing in deals? Are you on the sidelines? And if you are investing or thinking about investing, is debt and mobile homes and those asset classes, are those the ones you're looking at?
I mean, I'd say debt, industrial, mobile home parks are interesting to me personally. And also from the data we see on our platform or things that we're bringing to the table because of what we see these good operators are located in. There's a lot of really good multifamily operators as well. Personally, I'm more on the risk reward side. So I prefer taking a little bit more risk and more reward. And I don't know, I'm just not seeing that much meat in the multifamily asset class.
Yeah, it will be interesting to see because that's kind of everyone's starting point, right? And a lot of new investors, that's what they know. So that's where they start. And it is hard to find quality deals or even any deals in multifamily. So do you see I guess it's the bid-ask spread, right? Because there are people that want to sell, there are people that need to sell, but they can't sell at the price that the buyer wants to buy at. So do you see any of that changing for multifamily in 2025 where the buyers and sellers maybe get closer?
I want to emphasize one important point, all right, before I answer, because I am not a real estate expert at all. I'm an LP investor. By definition, I like to look at deals, look at operators and make an assessed bet. But going into understanding which are the best asset classes from an underlying asset perspective, it's more difficult for me to analyze if cap rates are going to be compressed, how interest rates are going to affect buying and selling. I mean, I believe people live in multifamily. People are going to need to sell multifamily. I do think there's going to be more supply in the market because of the interest rates not going down. And at some point, these multifamily operators who have floating debt are going to get screwed. and they won't be able to maintain the operational cost of it, and they will need to sell. And I don't think we've seen that yet, just because banks are rolling it down and just pushing it forward. And so at some point, there's going to be an influx, I think, in supply, which might create a good market to buy multifamily complexes. But yeah, I don't know. Because again, interest rates are high. And so to make a deal work, to pencil it in, is more complicated than a few years ago.
It's more challenging, and you're not, the returns are going to be lower, than what they forecast in the past.
And another interesting thing, and this is something that I don't know if a lot of people talk about, is the whole world of refinance. And when we started to invest 10 years ago, within the business plan was they expect to refinance after they stabilize the property. And that refinance increases your IRR because you get a lot of cash back. A year ago, they said the same thing because interest rates were high. And they said, yeah, well, they're going to go down at some point and then we'll refi. I don't know what they're going to pencil in now because I don't think they're going to go down substantially. But this is just like me guessing. And
just like anybody else, right? We're investors. We watch the market and we have no idea what is going to happen, but we have to at least look and use all our resources to try and figure out where things are going so we can be prepared. And that's why I diversify and get into lots of different asset classes, lots of different operators so that I can pivot if need be. If things aren't going well in multifamily, then yeah, I can pivot to mobile home parks for a while and that kind of thing. So how do you diversify then?
Oh, it's hard. First of all. And again, personally, it's all about your goals and your risk profile. I am a risk taker by definition. That's my business I'm in. That's my investing strategy. I've always preferred emerging managers, for example. I feel like emerging managers, even in this environment, they're going into a hard market. It's not an easy market. And so if you can find a good deal that has meat on the bone, because this is also an important aspect, I think that we should just talk about for a minute. I don't know how much you want to spend on this, but when you look at the big, successful, experienced operators who have a lot of investors, a lot of capital, they look at big deals. There are smaller deals that they won't even dive into because it's not worth their time because there's not enough meat on the bone. But there are a ton of small deals in the market. Like there are a ton of $5 million properties that you can renovate and sell for 8 or 10 or whatever. That's a great deal from a deal perspective, but it's not worth the big operators' time to go and do that deal. So the emerging managers, the smaller operators, there's a lot of deals that are in the market that they can find. Its problem is how do you get enough credibility that these are good guys, that they know what they're doing. And so I like investing with those guys because they're guys or girls, right? Men, women, they're hungry. They're going to go all in above and beyond to make sure that me as an LP, I will not lose my capital. And they'll do whatever it takes because they need to prove themselves. The terms in terms of splits and fees are usually really good. And these are, 1-2-man shows so they don't have a lot of overhead. So it's a lean operation. And so I still really like the smaller operators. It's really hard to vet them and find them.
Well, how do you find them?
I think all these communities, PassivePockets and a bunch of other, online forums, just like friends of friends, people that you can trust, because that's the bottom line aspect, making sure that this person is not going to screw you over. So I'm in a lot of these different groups and I meet a lot of people. I go to a lot of different events. And at the end of the day, you have to take a leap of faith. Not a lot of people are like built that way.
Well, you can take a smart leap of faith, right? You do all your due diligence, you network, you get referrals, you meet people and do all your due diligence, and then you take the leap of faith. I think too many times people take the leap of faith and then they're like, wait a second, can I go do my due diligence now? And you're like, nope, it's too late.
On the emerging managers, at least, you can't make it really there's no track record as a fund, right? Their track record might be they've flipped 1,000 homes in their past. They've done long-term rentals. They have 100 doors, but they've never syndicated a deal before. Or they understand their emerging managers and the terms are so amazing because they understand where they're at. Because I've seen the other way around. I've seen emerging managers like living on the moon and thinking, yeah, I'm going to raise a deal. I'm going to give you a 5% pref and then the split is going to be 60-40. I'm like, what the hell are you talking about? You've never done this before. Where are you? So yeah, it goes both ways.
Let's switch gears here a little bit. And I really want to get into Vyzer, the origin story of Vyzer. So, you had your exit. Now you're starting to be a syndication investor and now you're founding another company, Vyzer. How'd you come to the idea? What was the impetus for that?
So we did not build Vyzer originally to serve as a new business. So I'll give you so we sold the company, right? We started to invest. We had, after that first syndication, we did a bunch more with different operators, different syndicators, different types of geographies. And at some point about 5 years ago, me and Tomer sort of had this mess. I got an email from a GP, and I always tell this story because it's sad that it's a story, but I get an email from a GP. I'm like, holy crap, who is this person? And when did we invest with them, right? These good problems, first world problems, it becomes a mess. There's an administrative hurdle here that comes to investing in I'd say 5 or 10 different of these deals because you have, documents coming in, updates every quarter, every month, cash flow going in and out. These are good problems, but at the end of the day, there's a mess where we didn't have a team. We didn't have an assistant. It was just us doing it on our own because we didn't, make enough wealth where it made sense. And so we just hired an engineer and started to build our own type of virtual admin in a sense, a platform to pull in data from those emails that we'd get, pull in the cash flows from our bank accounts, just pull everything into one place, have a single financial source of truth. And while doing that, lots of people around us are like, wait, we want that too. Can we use the platform? And we're like, wait, hold on. Is there a whole business here? We decided there is, and we raised capital and got our third co-founder guy on board. He's also our initial capital and a bunch of other really great investors. And we, established a company and 4 years ago founded Vyzer and started to build this platform into something that's more servable for the rest of the audience and focusing on the US market.
For people that are new to Vyzer, what is it and how does it help investors manage their portfolios?
We essentially become that admin. If I had $1 billion and I had a family office, this is what they do for me, only we do it virtually. So for example, we can be CC'd on all the emails that our clients, our LPs receive from the GPs or different portals. We get access to the private investor portals. When you invest in a syndication, you get access to this LP platform to see your position. And when you're investing with multiple operators, you get different portals. And so we pull all those portals into one place. On top of that, we pull in your bank accounts, your brokerage accounts, your insurance, everything basically into one place, analyze it and give you those insights onto where you are today, where you were in the past, and hopefully where you're going to be in the future based on all your assumptions. So then if I have this single financial source of truth, all my data is pulled into it, it's analyzed, and then I can make better decisions.
So how is it different than, QuickBooks or Mint or some of these others that manage your finances? I already know the answer to this question, but I'd love to hear it from you rather than me telling it.
Well, it is a good question because so QuickBooks is the bookkeeping platform and it's not an investment management platform. So you can't track performance. We reconcile transactions and link a transaction to an investment, and then the performance is automatically updated. And then we cross-reference that with what the GP reported, because this happens more than often that people are not aware of. A GP in the syndicate, like a syndicator, will send you an update. Hey, this month you got $10,000 in distributions. But if that money doesn't appear in your bank account, that's a red flag. And we've seen this so often. I mean, not really often, but it happens, and people are surprised that this happens. Sometimes the GP notified you by mistake. That wasn't your 10,000; it was someone else's 10,000. They just told you by mistake and never appeared in your bank account. Or the other way around, you seize money in your bank account and you don't. So this is stuff that, from a bookkeeping perspective, maybe for the general ledger, it's good, but it doesn't track performance. So we're really focused on the investment management, the holistic financial management of a more complex portfolio. Complex meaning they have privates. And Mint, which is rest in peace, was closed, shut down a few months ago. But it's a budgeting app, which is really good for a specific task, which is budgeting. But again, it doesn't help with the investment management of everything you have.
Right. And I don't mean to break down the fourth wall or whatever it is. I'm supposed to be the interviewer, but I'm also a user of Vyzer. And I could tell you that, I used to have all these different spreadsheets, right? Excel spreadsheets that were just fighting with each other because you got to track the investment, then you got to track the distributions. Then I got Dropbox for all my documents. And, at Left Field Investors, we tried to build our own investment tracker for our community. And it was difficult. It's a whole different business, as you know. And so once Vyzer came around, that was for a syndication investor. It just makes it so much easier because all your stuff's in one place, all the documents and just all of your investments. And when a distribution comes in, you can link it up and have it just go right in. I like to do it manually because I like to know where everything is. I'm a little bit weird that way. But, it takes me 10 seconds to enter a new distribution. So that was my obstacle. So what are some of the obstacles you've seen investors face when they're trying to manage their portfolios, especially as they're growing from, one investment? Sure, that's easy. But like you said, once you have 10 or 50 or 100, it's just total chaos. So talk to me about some of the problems you're solving, the obstacles that investors face in this area. Yeah,
that's such a great question because each individual, each family has such a different set of issues they're trying to solve. I've spoken with clients of ours who before Vyzer, and this is crazy, right? This is like, I doubt that many people do this, but I asked this client, he's like worth $50 million. He's like, how do you track your investments today? He just told me, I have sticky notes on my refrigerator. No, there's no chance that's how it works. And I'm sure his CPA does some stuff for him, but that was insane. And so just like aggregating the data, creating it in a presentable way so that you and your significant others have that tap on where everything's at. Not to mention, if God forbid something happens to you, if God forbid something happens to me, everything's on the platform. My co-founder knows everything. He can tap into everything. But like that's like not on an ongoing basis. but it's something that does trigger people to want to organize their stuff. Second aspect is obviously when tax season comes around. That's like a complete mess. From a syndication perspective, just gathering all my K1s and then sending them to my CPA is a whole nightmare. Not to mention, all right, what did I invest last year? And just to touch on a feature, like what we did in our platform is we gave our clients the ability to delegate access to their Vyzer account to their CPA. Just, hey, CPA, don't bother me anymore. Here's your login. Just take whatever you need from Vyzer, my Vyzer account. Don't bother me. All my K1s are going to be there. Everything I did over the past year is going to be there. Everything's there.
How do the K1s get uploaded to Vyzer?
So we're tapped into the email updates you get from a GP. So some GPs send the K1s over email. We're tapped into the investor portal, which, the GPs upload the K1 to the investor portal and we retrieve it from there. So it's various methods for us to retrieve those K1s. It just creates, again, that peace of mind and order in everything I have in one place. And there's a bunch of other use cases, like even trying to understand my current portfolio, which of the funds that I invest in are doing well and which aren't, and comparing them one to the other is something that's really hard to do if you haven't built a super robust spreadsheet. And even then it breaks. Like I love spreadsheets. Don't get me wrong. I love spreadsheets. They just break and they're a lot of work to maintain. And if we're going back to our original comment on being passive, my objective is to be a passive investor. Once our portfolio grew to be 20, 30 of these LP investments, the administrative side of managing it all, it's just not passive anymore. And I've heard of investors who have actually made a decision not to invest with new funds, new operators, new deals, just because of the administrative headache. Before Vyzer. And that's like a stupid decision. Like if that can be solved, and again, this goes back to goals, your objective should be either wealth creation or wealth preservation. And on both sides, you still need to think about your finances to that extent.
You do, but you also, the friction of having to, monitor these investments, the more you get, the more complicated it becomes, right? And then if you throw in things like, we work with TribeVest, so you have multiple owners on, so you're not a 100% owner of all these investments. It just gets chaotic. And so I think, staying organized and understanding where your investments are and what you have, it sounds stupid, right? If you only have 5, then you can name them off the top of your head. But, for people that have a bunch of investments, it gets really complicated. So can you also talk about, once you get all the data in there, then you can view it. Are there reports you can run to, estimate what your future cash flows are or to confirm what your past cash flows were?
Listen, it's a very intuitive but robust piece of software. And we've been adding, Jim, since we launched 2 years ago, like there's a new feature coming out every other week just based on feedback we get from our users. One of them is projecting cash flow, like you mentioned. Because when you have all these different deals, each of them will draw off cash flow because I expect to get distributions or I expect to have capital calls depending on the type of investment vehicle. But I also have my W-2 income and my cost of living. We built a report, which is a dynamic report where you can see how much cash I have today and how that cash will play out in the future based on all these assumptions from my different holdings. And then on top of all that, you can create scenarios. Whereas, all right, what happens if I invest in a new deal today? How will that affect my cash flow, both from a negative and positive standpoint? Or if I buy a house or go on a trip, like there are all these scenarios that I want to add in. So there's a cash flow side of it. And then there's other aspects because a lot of people we know, they're borrowers and they go to lenders and they need to supply a PFS, a personal financial statement. We already have all the data. Why can't we just click a button and then generate a PFS for you? And so we've added that report as well. Same goes to, committed capital reports, because I don't know if this is really relevant for many of the investors in the passive investing community, but like when you invest in large private equity firms or VC, you commit a certain amount of capital, which is drawn over time, right? You commit $500,000, which over the next 2 years is going to be drawn. Managing that when you have multiple of these is also a whole headache. And so we have these, capital call reports and committed capital reports. So there's all these different reports that you can generate. It's a really robust piece of software, which we built with a consumer in mind because we use it. I'm not a financial professional. That's what was my problem with the industry, because everything you try to use like built with these like really mumbo jumbo terminologies. Now I just want to know what I have, what's going to happen in the future, and be smart enough to give me the best insights on that. So that's how we had it in mind.
These days, everything's about data, right? And now you have a bunch of data because you have a bunch of investors putting all of their information in there. So I assume, I know that you anonymize the data, but how are you using the aggregated data to help individual investors?
You said it for a second, but it's important to tap into that for a second. Because it's an important question I'm sure people have about, privacy of data and security, right? Because, that's our top of mind always. We didn't launch the product 2 years ago just because we wanted to make sure that we're top-notch security and everything is extremely private and protected, because I care about my clients and our users and protecting their data and their security, but even more so, I care about our company. And if something happens to any one of my individual users, we're screwed more than any individual user because it's we don't touch money. It's all read-only information, but we need to make sure that we're protected above and beyond so that we're protected. And obviously by virtue of that, all of our users and data is protected. On that note, what you just mentioned about our data set, we've always known that we want to be focused on the LP. That's our main objective, like no conflict of interest. How do we create the most value for our user base? Now, growing as a company and the data set we have, we are sitting at more than $8.5 billion of assets in terms of data. 70% of that is in the private markets. We've opened up a whole section within our product where we show all of our user base, and people can opt out if they want, but no one almost does, can see anonymized aggregated data of where and how everyone else is investing, how they allocate from an allocation perspective, but even more so, which specific sponsors, syndicators, platforms, funds, managers people are investing in. How much is invested into each of those, and a lot of really interesting data points. And that opened up a whole interesting aspect of the platform, which is we can not only help people track and manage their wealth, but also help them allocate and find the best opportunities in the market based on actual investment data from other people. And so we started to do something a few weeks ago where we said, all right, we can identify the top operators, the top syndicators in each asset class. Let's connect them with our user base and give a lot of credibility behind actual investment data in those funds.
Is it top meaning most money invested with or best results, or how do you define that?
That's a great question because our top from a dollar perspective is not our best. Even more so, they're probably not the best because of different aspects. So the way we see it and we define it is, number one, if you think about the PassivePockets community or any community for that sense, and someone writes a question in one of those forums saying, hey, has anyone invested with XY? I'm not going to say X because X is a company, but XY, all right? And then 5 people respond, yeah, I invested with XY. And then what is the first response? All right, what do you think? And there's this whole dynamic around them. Those questions are what we're quantifying from a data perspective. So how many people have invested with this fund? How many people have invested more than once with them? If they're supposed to distribute capital, have they stopped? Have they had capital calls that were not expected? Are they performing from a cash flow perspective as planned? From an IRR, if they went full cycle as planned. So there's all these different metrics that we tap into to say, this is a good operator and this is not a good operator, at least at this point in time. And we're not saying the bad ones because I don't want any liability for that, but we're just saying who the good ones are. And the good ones, we want to bring value and we know they're good. So why not just not connect it to? And so that's what we're starting to do at the moment as well.
And how do you connect them?
Basically, we reach out to the syndicator and we tell them, hey, listen, we have a lot of data, gives you guys credibility. We want you to come and if you have anything you're raising for, come and pitch it because we want to bring value to our clients.
Excellent. I mean, that's a great idea because that is exactly what you're doing, right? It's similar to PassivePockets. We have a bunch of LPs and we're here to serve the LPs. And we also want to put quality deals in front of them and have the community kind of look at them together. So as we're moving forward, what's the future of Vyzer as the real estate investing landscape evolves? How do you see Vyzer adapting and growing?
Yeah. So first of all, real estate is it's a sub-asset class of privates. And in privates, there's private credit, private equity. And sort of, we really believe in that as, bringing access to more better private equity, private credit type deals and opportunities, most of it based on the data we have. And so as we grow from a user base, from a data perspective, we can provide more credibility around these private placements and then grow from there. And so we collaborate and we can launch this now and talk about it because we're doing a collaboration with PassivePockets, whereas any paying member of PassivePockets gets free access to our Plus plan on Vyzer, which, is extremely valuable. This will be live when we launch this podcast, but we're increasing our prices as well. And so it's going to be an increased price what we have today. So even more value for the PassivePockets community. And on top of all that, because we also are increasing the data set, we want to bring more value in the sense of the data to the community as well. So if we can say, hey, PassivePockets user, by the way, other people in PassivePockets, this is how they invest, and you can learn more about that. That's more value we can bring to the whole industry and the community particularly. And so as we grow as a company, first, the product is going to evolve. Obviously, a lot more. We already have AI components to it for different mechanisms, and we're going to add more and more of those automations and AI offerings within the product itself, grow from there, and bring as much value as we can to this investor avatar, which is currently underserved in the market.
I think it's amazing that all PassivePockets members will get access to Vyzer because it is a great tool. I'm trying not to be a fanboy, but I'm sure it bleeds through. I think it's really simplified things for me. So you need some kind of way to analyze, sort, manage all of the investments you have. And I haven't found one that's better than Vyzer. So super excited about that. I also am excited, I love the fact that we can see right now the aggregate data for who's invested with what operators and all that. And then to also be able to say, well, I'm a member of PassivePockets, so what are my fellow community members, PassivePockets members doing? So then I'll have two sets of aggregated data that I can look at and compare. So just super excited and want to thank you and Vyzer for being great partners, back when we were left field investors, and now with PassivePockets, you guys are great partners, and we're super excited to be able to offer our members this service for free. So Litan and all of Vyzer, thank you for being partners, and thank you for being on the show.
I love it. Thank you so much, and keep on doing some awesome stuff.
And that wraps up our deep dive into Litan's story and how his company, Vyzer, can simplify and streamline your passive real estate investing journey. A big thank you to Litan Yahav for sharing his experiences and showing us how a virtual wealth management assistant can make staying organized effortless. And remember, all PassivePockets members will receive a free Vyzer membership. Doesn't get any better than that. By centralizing your data, providing clear insights, and eliminating the need for endless spreadsheets, Vyzer helps investors focus on strategic decisions rather than administrative headaches. The result? A more confident, informed approach to building your real estate portfolio. If you enjoyed this episode, don't forget to like, subscribe, and leave a comment on your experiences managing your investments or questions about Vyzer. And please take our survey and help grow the show at PassivePockets.com/survey or click the link in the description below. For more resources and a 7-day free trial to our community of like-minded passive investors, visit PassivePockets.com. Thanks for tuning in, and as always, happy investing.